The US dollar, guys, obviously is going to have a move today on the back of the Federal Reserve announcement. And by the way, let's be clear. We saw the stats on Twitter that I posted on Twitter. In general, it's looking like people have no clue. In other words, it might just be a choppy decision. We'll have to watch and see. But what is the dollar telling us? Well, short term, the dollar is overbought. There's no doubt about it, right? If we look at the dollar here, the dollar has had this big move to the upside. We are above this pivot high right here, but we're not too high above it. Now, what I want to do next is go to a larger time frame. Let's look at the bigger time frame. So we'll make this into a time frame game plan, which is so important to understand. So now if we go to the bigger time frame on the US dollar, the weekly chart, what do we start to see here? We start to see a sharp move up, a sharp reversal, and sideways consolidation. And what we have is a trend line going back to 2021, right to this low. All right, that was, by the way, that was October of 2022. What was important about that is that that is when the stock market bottoms, interestingly enough, right? So again, coming back in here, actually it was a little bit before, but either way, that was, again, check that. That wasn't October of 2022. That was midsummer, and we saw the move up on the US dollar there. But my point here is this, is that as you're coming up here, all right, and by the way, this was the top in when the market bottomed. That was the market bottomed and the dollar top, which is correct. Usually the markets move inverse. But going back to what our likely scenario is, what we have is a lot of resistance right through here on the weekly chart of the US dollar. So again, as a technician, what do I look for? I look for what are my probabilities. Everything I do is probability based, and that's what a lot of people don't understand. You're never going to be 100% right. I've made plenty of bad calls in my career, but it's based on percentages, meaning that about 75% or more of my calls work out, 20% don't. In any case, what this tells me is that the dollar is 1, 2, 3, 4, 5, 6, 7. We have basically a time count here into resistance, right? Into all these pivot points right across here, and I'm expecting a move down in the near term. What that implies is that in general, we should be seeing a slightly less hawkish Federal Reserve, maybe a Federal Reserve where the market starts saying, hey, listen, we're not going to necessarily anticipate a rate hike. So the key is by looking at all of these charts, the dollar, the yields chart, you can get a sense of what the market is anticipating. And when I say the market, folks, I'm not talking about, the retail investor. I'm talking about big money. What is big money expecting? Because that's what's going to influence the dollar. You don't see mom and pops trading the dollar. You just don't. It's big money trading currencies here. You have big money trading commodities, big money trading bonds. That's the key right there. So again, in general, what you understand here is big move up. We've had this sideways consolidation, right? Eventually, this trend line extends out, and if price gets here, that's going to be your support. It looks like it's right around 102 on the Dixie, on the DXY. Now, at some point in the future, this chart pattern to me looks bearish. So if we look at the bigger time frame, big move up, but a huge reversal, and now you're consolidating down the line. If you said, where's the dollar in 2 years to 3 years from now, the dollar is lower. This pattern is bearish consolidation off this move, and eventually it's down. So just understand that time frame matters. So you have short time frame, which right now is bearish, a little bit of bearish, we're into resistance. And then what's the bigger time frame? What's this bigger pattern? And that is also net bearish. So in general, I would say that the dollar is probably near a top both short term and long term.